Good morning. It's Thursday, March 27th. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. We got opening day of baseball and we got gold sitting right near those record highs again. So as I started doing the video here, 30.6550 is where it's trading at, which is on the high of the session and coincides with a few things. Coincides with the all-time high on the futures contract, coincides with an upward trend line, up about $40 on the session. That's a 1.3% move. So quite a bit of action here going on in the precious metals overnight. Now looking at yesterday, the stock market fell for the first time in 4 trading days, and it was really these new worries about the tariffs that put the market really on a risk-off mood. The S&P 500 slipped about 1.1%. The NASDAQ fell 2%. And this comes after President Donald Trump announced tariff plans for 25% on automobiles made outside the U.S., which really sent stocks lower. The yield on the 10-year had advanced, the dollar gained, and stocks such as Nvidia and Tesla both dropped about 5.5%. So checking on the equities overnight, bit of a mixed picture. You got the NASDAQ down about 11, you got the S&P up 2, you got the Dow up 81, small caps are up 5, and you look at the FANG index down about 28 right now. So bit of a muted response in the equities here, and I really think that they're waiting for more details as whereas the direction of this market may lie. We've rallied up from those lows from 5,500 to about 5,850, and now we've come off with one trading session. So was that rally the relief rally that everyone was looking for before we resumed the downward trend? So we're gonna have to see how the day unfolds and the market unfolds. So looking at some of the strongest markets based on technical strength, still is copper up 28%, but the chart pattern is slightly suspicious. I'll update that in the chart pack so you can see what I'm talking about with another topping tail. These are things that we've seen in other outside markets before they resume their downtrends. So kind of a blow off top is the way I like to refer to it on some of these markets. Now looking at the precious metals overnight, some of the things to watch in today's trading session. So if you were to sit on my shoulder, sit next to me throughout the trading session here today and see how I operate, I'd utilize some of these opportunities with April gold only having a couple trading days left in the contract here. If you're on the long side, that first notice date is going to be on the 31st. You're going to have to roll over on Friday. So why not utilize a day like today to trim some of those positions off? I'll also use the tactical ranges. This is something that I post in the Metals Edge, and I'll look and see. Generally, when I'll print these off and I'll look at it and the market's already through that resistance level 1, it tells me that it's a bit of an outside day, slightly a volatility event per se. And those are the days that I really look to utilize to take some positions off. And why not do that again? Because of the fact, top of the trend line, April gold's got to roll over. We've got a $40 move on the day, which on an average range is about $40 a day with the gold moves. So was that the top? I'm not saying that on the day session here. I'm just saying that this is a great opportunity and we don't want to squander these types of opportunities. You got silver up 50 cents at 34.75. Gold silver ratio dropping to 88 to 1. So that's had a good performance this week. Silver caught a bit of a tailwind with the copper market here, got some love, and we saw silver prices push on up. So first resistance point, we've gone through that here on the silver market already today. So all eyes are going to be on 35.02 on up to about 35.07. That's where that double top took place. And remember what I told you, and I put this in the chart back here, is that when you get to the double tops and the double bottoms here, a double top, if you don't know, it's where two price peaks are at similar levels and it could signal a potential downturn. That's what we saw in the silver market where it sold off for about 4 days after matching that double top here. Now a triple top, this is where 3 prices are at the same price point. That could become a strong bearish reversal sign where the market kind of breaks out to the upside and starts a new price band. We oftentimes go through this with crude oil where it operates in these like $5 to $7 price bands. And if you look at crude oil right now, it's the $65 to $70. We break above there, we get a couple day close, could be $70 to $75. So you want to look at silver as potentially breaking out through this double top and then starting a new price band on the upside. Bit of a rally going on in the platinum market. Platinum's been a difficult one recently. The thing about copper, to come back to it, is that was this a buy the rumor, sell the fact as far as the tariff announcement? We looked at aluminum and steel and things like that as coming into the administration, and other markets, even per se like Bitcoin, where coming into it, we saw the euphoria, we saw the blow off top on the announcement, and then we see prices come down here quite a bit. Now, shifting gears here to two drivers of the gold market today, it's climbing as Trump's car import tariff is boosting some safe haven demand here. So we're seeing intensifying trade tensions, and it's bolstering some of this demand. It's rising as much as 1.2%, trading near that 30.65 an ounce, and it's right near those all-time highs on the peak. You also have Goldman Sachs. They increased their gold price forecast to $3,300 an ounce by year end, citing strong central bank demand and solid inflows into the ETFs. Now, the bank expects that the appetite for central bank demand could be about 70 tons a month throughout the year, and that central banks continue to push gold at a rapid pace, particularly the emerging markets. So emerging markets are really concerned about the volatility in their currencies, and it makes sense for central banks to lighten up as far as the load on holding other emerging market currencies and bring it back home with some increasing gold. So the analyst also predicts that those inflows into the ETFs driven by investor demand for hedges. Remember, with the volatility in the equity markets, the sell-off, things like that, people are looking for some safe haven places, and why not rotate and add a little bit into your portfolio as far as gold, silver, and other hard assets. So gold, they're saying, could reach 3680 an ounce by year end if the ETF holdings reach pandemic level heights. So one thing we have been monitoring has been the ETF flows. And if you look at the previous trading session, the exchange traded funds, they actually cut 74,000 ounces of gold in the last session, bringing this year's net purchases to 4.89 million ounces, biggest one-day decrease since February 13th. Now, what I think was going on there was that you saw a lot of people kind of seeing the market roll over a bit, seeing it consolidate, and then you get a one-day up pattern or taking some of those positions off, especially the April contract, and the ETFs that utilize the futures contract probably lighten up some of the load on there. So looking at the ETFs on the silver side, they added 14,000 ounces of silver in the last trading session, bringing this year's net purchases to about 10 million ounces, and it was a third straight day of growth. And that's why you're seeing the gold-silver ratio come down to 88 to 1. So year-to-date percentage change, gold up 5.9% on the ETF and silver up 1.4%, turning positive here in the last few sessions, and hence gold-silver ratio 88 to 1. So looking at some outside markets, we did have crude oil on the front month on that May contract test that $70 level. Saw a lot of people take positions off yesterday in the gold market, as that was one that we identified between that like $63 to $65 area, with 63 being where a stop out point that a lot of people were looking at being in place, 65 to 68 being the average area where people were adding positions, coming up to 70. Why not look at that downtrend there? And that's where they're trimming positions. So it was really the oil inventory data which fell the most since December. It signaled some supply tightness in the market. So we saw the inventory shrink about 3.34 million barrels, bringing it to the lowest level of the month. And we also saw inventories for gasoline also dip. So some things I'm going to watch here today: the unemployment claims here, the GDP price index, and then of course tomorrow I'll be sitting back here with probably a bowl of cereal because too early in the morning for popcorn, and watching that PCE data come out, the personal income, personal spending. So you guys got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.